Vitale, American Retirement Advisors with the Gradient Investments Weekly Talking Points for the week ending October 13th, 2023. Let's get into stocks. The market's continued recent weekly trend of oscillating, with the benchmark S&P 500 rising 0.47%, the Russell 2000 dropped 1.47%, and the NASDAQ was down 0.18%. Now overseas, the international developed markets, which is the EFA, was up 0.97%, and the emerging markets was up 1.52%. Now within the U.S., the best performing sectors were energy, not surprising given the war in Israel and Gaza, and utilities, while consumer discretionary and the materials were the laggards in the market. So we're still seeing everything unfold and how everything's coming together right now. Let's talk about fixed income. Bond values rose as interest rates declined across nearly all Treasury maturities, retreating from a 16-year high reached earlier in the week. Now the yield on the benchmark 10-year Treasury dropped 15 basis points to 4.63%, as the inflation index indicated that upward pressure from oil prices may turn downward, lessening the likelihood of future Federal Reserve rate hikes. So we'll see how that goes. We should see a pause or a reduction, but we're probably going to start to see them dropping more in the first quarter of next year is kind of what everybody's thinking. So we'll see how that goes. Talk about commodities. The price of gold rose 5.27% last week to $1,941.90 per troy ounce, as investors sought a safe haven in response to the attack on Israel and subsequent military actions. Gold has fluctuated all year. It was close to 2,000 earlier, came all the way back down to about 1850-ish, and now back at 1950. Talk about economic data. Sales of motor vehicles rose to 15.7 million units seasonally adjusted annual rate in September, after an upward revision to 15.3 million units in August. Now the annual pace of sales in September is above the consensus of 15.3 million units, and for vehicles produced by American automakers, the annual rate was unchanged from August despite the auto workers' strike in the latter half of September. And hopefully that's going to be coming to a resolution. That's been going on for a little while now. We'll see what happens there. The consumer price index rose 0.4% in September, a slight deceleration from the 0.6% rate reported in August. And the index for shelter was the largest contributor, accounting for over 1/2 of the increase, followed by energy. Excluding volatile food and energy, the core consumer price index rose 0.3% last month, unchanged from August, which amounts to 3.6% on an annual basis. That's good. Now, how about company news? Let's talk about how the stocks are doing individually in our portfolios. That's kind of what we're seeing, because we started to see everything really going good, but it's pulling back. BP PLC, which is a G40I, our international holding, rose 7.35%, and ConocoPhillips, which is Core Select, rose 8.26% last week. Energy stocks were rising and oil prices rose amid worries of further escalation of the conflict in the Middle East, which that could have a big effect on the road. Novo Nordisk, which is a G40I holding, rose 10.88% for the week. Management announced sales and earnings growth for the third quarter and full year would exceed prior guidance based on higher full year volume expectations for the Ozempic, given its success for diabetes management, weight loss, and reducing the risk of kidney failure. Also, the company projects higher profitability for Ozempic and Wegovy, which is its weight loss drug. So that's positive for the market. Now, you don't see a whole lot. We're not a lot of G40I because international, you can get into that portfolio, but we don't always have a lot of that because domestic is what we're seeing, but it's good to have a piece of that. United Healthcare Group, which is a Core Select G33 and G50 holding, reported quarterly revenue and earnings that were ahead of expectations, and management also raised guidance for the full year, and shares rose 2.78% for the week. And shares of Cigna Group, which is a contrarian choice, Core Select and G50 holding, rose 5.85% in response to the results from United Healthcare. Okay, that concludes this week's market summary. So thank you so much for being part of our ARA family. If you'd like to get a hold of us, give us a call at 855-756-5700. Visit us at aradvisorsinc.com. Remember, we're starting to see a lot of, we don't want to chase returns, but that's why we say stay invested, make sure we've got some safe options out there. We are seeing some really good interest rates right now, so there is a lot of safety, which is why you're seeing the market pull back, because you can get a pretty decent rate of return without the risk of the market volatility. So people do have more money in safety right now, which is why you're seeing the market fluctuate as it is. But if we start to see that the Fed starts to cut rates, you're going to see more money coming into the market because people want that better rate of return, the better growth strategies. So it's a good way to keep, as we talk about all the time, make sure you're properly allocated, make sure we've got our safe money on hand, doing Roth conversions before the end of the year, take advantage of the low tax brackets for right now. And that's it for right now. So God bless you. We'll see you again next year.